Hi everyone, welcome back to Corporate Decoder. Today we are diving into a company report, and trust me, after reading this you might need a new watch because apparently they are pretty deep into timing. This company, the LGL Group, just released their financial results for the first 3 months of 2025. We will quickly break down the key numbers and see if this company is ticking along nicely or if it's time to bail. Before we get started, if you find getting straight insights from corporate documents valuable, make sure you subscribe. We also have a Discord community linked in the description below where you can discuss these filings and other company matters. First off, LGL Group, also called the company, announced their financial results for the first quarter, which ended in March. These announcements were released in a press release. Let's jump straight into the numbers. One of the key things to look at is how much money the company is bringing in, what the company earns in the short term. The accounts receivable net is at about $79 million. This is the money owed to the company by its customers. You can think of it as a short-term loan the company gave its customers. You can think of it as a short-term loan the company gave its customers. You can think of it as a short-term loan the company gave its customers. You can think of it as a short-term loan the company gave its customers. You can think of it as a short-term loan the company gave its customers. Their total current assets, which include things like cash, accounts receivable, and inventory, are sitting at around $24.6 million. These are assets that can be converted to cash within a year. On the other side, the total current liabilities, which are debts due within a year, are around $11.2 million. This means they should be able to easily cover all their short-term debts. Their net sales, which is the money they're getting from sales, came in at $10.3 million, but it cost them money to make those sales. The cost of sales was about $7.1 million. This cost includes things like the materials and labor needed to make their products. Subtracting the cost of sales from net sales gives us the gross profit, which is $3.2 million. Now, running the business also costs money. Selling, general, and administrative expenses were $2.7 million. This includes things like salaries, rent, and marketing costs. Taking all that into account, the income from operations, which is the profit from the core business, was about $545,000. After considering interest and taxes, the net income, which is the final profit, was $438,000. It's important to remember that this is before any preferred stock dividends, which we will talk about in a second. Now, if you have preferred shares, they get paid first, and the net income available to common shareholders was $346,000. To get an idea of how much profit is available per share, basic net income per share was about $0.05, which is not a lot. This is a key number for investors because it tells them how much profit they get for each share they own. Switching gears to cash flow, the company generated $1.3 million in cash from operating activities. This is the cash that the company is generating from its normal day-to-day business. On the other hand, they used about $11,000 in investing activities like buying equipment or other assets. Cash flows from financing activities were negative $1.1 million. This mainly includes dividends and payments for treasury stock. Basically, they are buying back some of their shares from the market. Taking everything into account, the cash and cash equivalents increased by about $174,000 during the quarter. That said, you need to remember the starting number, which is what's called cash and cash equivalents. At the beginning of the period, this basically means cash and things that can easily become cash. The company had $3.6 million in cash and cash equivalents to start the quarter. So let's wrap up what we have seen in the report. This filing is signed by Patrick Huvane, the Executive Vice President of Business Development. Now, looking at these results more broadly, the LGL Group shows mixed signals. The company is profitable, but the profit margin isn't very high. The net income of $438,000 on net sales of $10.3 million shows that they're only making a few cents for every dollar they sell. The cash flow from operations is strong, indicating the business can generate cash. However, a large chunk of this cash is being used to pay dividends and buy back stock, which can limit future investments and growth. Overall, the LGL Group seems stable but not particularly exciting. They are making money, but the growth potential may be limited. The key will be to see how they can improve their profit margins and use their cash flow more efficiently. Alright, that's our breakdown of LGL Group's latest filing. What are your thoughts on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord in the description. Thanks for watching. See you next time.